I have been staring at this gold chart for the last 12 hours, and I'm starting to think the chart is staring back. Gold is going straight up, and not in a healthy, market-doing market things kind of way. It's moving like someone chugged a Four Loko and started blasting a David Goggins podcast at 3 a.m. in a basement gym. For 40 years, gold was the boring asset, a respectable 6% return for people who liked safety and beige sweaters. But over the last 5 years, we are seeing nearly 20% annual returns. In a normal, functioning world, this shouldn't be happening. It suggests that either we are no longer living in a normal world, or I am dramatically underestimating the sheer institutional anxiety hiding behind these shiny rocks. Welcome to Financial Mindset. If you find this investigation valuable, please subscribe to the channel. It's the only way I can keep digging for the truth for you. Gold is hitting all-time highs as I record this, but the price isn't even the weirdest part. The real mystery is that nobody can agree on why. Not the traders, not the economists, and certainly not the canned beans and silver crowd on Reddit. Everyone has a theory, but nobody has an answer. Something massive is shifting underneath the surface, and gold has officially woken up and chosen violence. I've brought all my research into the war room because we need to figure out what the world's biggest players are preparing for. Stick around, because once you see the signals I've uncovered, you'll realize that the stability we've been promised is a total mirage. But before we can look at what is truly driving this madness, we have to burn down the lazy explanation that every talking head on the news is trying to sell you. Inflation. Look, I get it. Inflation is the easy villain. It's the one we feel every time we're at the checkout line. Life is getting impossibly expensive. Rent is a nightmare. Groceries feel like a luxury. And fast food prices have climbed so high you'd think Ronald McDonald was personally hired by an aggressive private equity firm to harvest every last cent from your pockets. It's a Ronald McDonald economy where everything costs more and feels like less. But here's the problem with that obvious answer. The math simply does not hold water. If gold were purely a reflex to inflationary pressures, it would have gone nuclear back in 2021 when the CPI was doing its best impression of a meme coin after a late-night Elon tweet. But back then, while the value of your dollar was melting away in real time, gold was basically taking a nap. It sat there, cold and indifferent, while the world screamed about the cost of eggs and used car prices. It didn't budge. So why now? Why, when the official inflation numbers are supposedly cooling off, is gold suddenly putting up Wilt Chamberlain numbers? It's because this isn't about the price of a Big Mac or the rising cost of a gallon of gas. It's reacting to something far more systemic, something that hides behind the curtain of normal economic data. When the mainstream media tells you gold is rising because of inflation, they're giving you a comfortable lie to keep you from looking at the structural rot underneath. This isn't just a reaction to a temporary heat wave in the economy. It's a sign that the very foundation of trust is starting to crack. If you want to see where that trust is truly evaporating, you have to look at the people who actually hold the keys to the vault. We're witnessing a massive, high-stakes divorce happening in the shadows of the global financial system, and it's being handled with the kind of calculated silence that should make your hair stand on end. Think of it like this. Have you ever seen a couple on Instagram where one person suddenly starts deleting all their shared photos? They haven't announced the breakup yet, and they might still be showing up to dinner parties together. But the signs are everywhere for anyone who cares to look. That is exactly what is happening with the US dollar right now. For 80 years, the greenback has been the undisputed global reserve currency, the absolute king of international trade. But the world's central banks are quietly scrubbing the dollar from their highlight reels. 20 years ago, central banks held over 70% of their foreign exchange reserves in US dollars. Today, that share has slipped to 58%. Now, 12% might not sound like a headline-grabbing crisis to the average person, but in the world of macroeconomics, we're talking about trillions upon trillions of dollars being shifted out of our system. This isn't a sudden dump. That would be too loud, too chaotic, and it would trigger a global panic attack that no one, including the sellers, is ready for. Instead, they are doing something far sneakier. They call it diversifying. It's a strategic, slow-motion tiptoe out of the room to avoid waking the sleeping dragon of a total currency collapse. They aren't moving into the euro or the yen. Those ships have their own holes. They are moving into gold. I've started thinking of gold as the ultimate monetary prenup. It's the just-in-case things go south safety plan for nations that are starting to realize they are over-leveraged and over-reliant on a U.S. financial system that feels increasingly like a house of cards. When the people who literally print the money start trading their paper for shiny rocks, you have to stop and ask yourself, what do they know that we are being told to ignore? This stealth breakup is the most significant geopolitical shift of our lifetime, and it's happening while most people are distracted by the noise of the daily news cycle. If the people who create the money are scared of the money, we need to pay very close attention to what they're buying. Banks are quietly scrubbing the dollar from their highlight reels, then the physical gold they are dragging into their vaults is the smoking gun of this financial crime scene. We aren't talking about a few gold bugs or a viral Reddit thread here. We are talking about the 1,000-ton club. For the third straight year, central banks have hoovered up over 1,000 tons of gold annually, more than double their average from just a decade ago. In fact, 2024 officially went down as the biggest gold buying spree in human history. Think about that for a second. Not the 1970s, not the height of the Great Recession, but right now, in our supposed era of innovation and digital progress, the people who actually run the world's money are scrambling for the most ancient asset there is. I've started calling this institutional anxiety. It's a specific kind of dread that exists when the people who print the money start to fear the very currency they've created. When 95% of these institutions tell you they expect gold holdings to keep rising over the next year, they aren't just making a market prediction, they are telegraphing their own exit strategy. They are looking at U.S. debt levels that look like a vertical line and a financial system that feels like it's being held together by duct tape and hope. This isn't panic buying. Panic is what happens when the floor falls out. This is preemptive positioning. It's the sound of the world's biggest players quietly boarding up their windows because they can see the hurricane on the horizon, even while the sun is still out. They are hedging against a future they simply no longer trust, and they're doing it with a speed and a scale that I've never seen in my life. It's a sobering realization to find that the very people who are supposed to be keeping the lights on are the ones buying up all the candles. This massive rush toward gold is the ultimate signal that the ground is shifting. Yet if you look at the stock market, you'd think we were in the middle of a never-ending celebration. It is a total glitch in the financial matrix. Risk-on assets and tech stocks are partying like it's 2 a.m. in Miami, while gold is quietly building a fallout shelter in the backyard. Usually, the world picks a lane. Either we are high on growth and optimism, or we are terrified and looking for cover. But right now, we are trying to do both at once. It is a chaotic mess of mixed signals, much like that person who tells you they aren't looking for anything serious, and then immediately asks what your love language is. Markets simply do not behave like this when the path forward is clear. They act like this when the biggest players are hedging against a future they can't quite admit to publicly. So, where do you stand? Are you still on the dance floor at the tech party? Or are you in the bunker with the shiny rocks? Drop your love language in the comments below. And if you want to keep tracking these cracks in the system with me, make sure you're subscribed to Financial Mindset. Because in a world this confused, doing nothing is the only guaranteed way to lose.